All right, what's going on, guys? So, again, we're going to be looking and reviewing today's price action for this example. So, I'm going to be going ahead and talking about a trading model that I was using before I was able to switch over to a different strategy or just adding another confluence to what I use, the bottom and top tick. But we're going to go ahead and just go over on the previous model that I used beforehand that has definitely made me profit into the market. So we are going to start off with just this. So what I target for um, trading fucking macros and New York Open is I usually mark out my PD arrays. So with this, we'll be using your, hold on. I will go into the day, go on a higher time frame, find my draws on liquidity, scale down, and be like, you'd mark out other liquidities and be like, okay, are we bullish? Are we bearish? We see this order block, pretty bullish. You would mark this out as well. This would be our hourly. We at first was respecting it, but New York opened and we retested it again, probably re-sweeping it. Doesn't look like we swept it. Just making another, I guess you can count this. Sweeping liquidity over here. And then still, we see this volume imbalance right here. So using your time frame alignment, I'm pretty sure I made a video on what time frame alignment is. You can use, if we have a 15-minute PD array or anything like that, I'd still use 5-minute or 1 minute for our confluence. So as price came down, we'd be like, are we bearish? We'd be like, oh, I mean, we seem bearish. We have a continuation on 5-minute candles that are just constantly bearish. But like I said, when market opens, you guys need to focus on the higher time frames. What are we actually doing? What's the picture that's getting formed? So we see that price was respecting this 15 minute. As you guys can see, this is our 15-minute candle. So respect the PD array, creating an order block. We look back on our correlated pair, be like, okay, so in this PD array, did we form some type of SMT in our area? So it would be the same thing right here. If you guys are trading NASDAQ, you guys would see we're respecting this entire 15-minute. Reason why is because we didn't show full displacement out of this entire zone. We did have displacement on the CE point, and I guess in this video, I'm going to also show you guys on what displacement and respecting PD arrays actually is. So, like I said, 15-minute time frame on a 5-minute time frame. This is New York market open. We wick this area. Wicking a PD array or wicking a liquidity level shows, like for example, right here, we have the same thing for liquidity displacement. What is liquidity displacement? Where we are wicking this entire area. We're respecting it, not having full displacement. So we had a liquidity sweep right here, respecting 15-minute PD array with its wick. The body is what's showing us everything. So as we had this, we would look at our correlated pair, be like, okay, do we have any SMT? So what I look for is if we have any SMT in our PD arrays, which brings it a higher probability trade. If you have, so like I said, if we're using a 15-minute PD array, you would still use your time frame alignment, either on a 5-minute or a 1-minute. On a 1-minute, we'd have, and on other higher time frames, we still have this SMT that was formed. So we have SMT in a 15-minute PD array, which is what I generally look for. And then for other confluence, you guys can either enter off the first order block that we had on a lower time frame. So as you guys can see, this would have been, I would count this our most recent order block. Or if you guys were, I don't know, impatient, waiting for a market structure shift, this would be your market structure shift. On a lower time frame, would have entered right here, going long, stop loss. It could be two placements, either at the wick, knowing that we have a swing low down here, protected area. This would be our manipulation. Protected low. Simple as that. So you guys can have it right there. CE point right here above the 15-minute PD array because we respected this entire zone now. So this would be our support level, I think, for retail terms. And then you guys can simply target for these highs right here. A simple 1 to 1.5. Good risk, good everything. But like I said, on the higher time frame is what would be our draw on liquidity. For those of you that don't know what draw on liquidity is, I have a video in my YouTube channel somewhere. I think it's in a playlist right now that teaches you what and how to find your draw on liquidity. So this is your internal range of liquidity, internal draw on liquidity. Your external draw on liquidity would be over here. We have this swing point right here. We have this swing point right up here. This swing point right up here, which was our weekly high. And that is what I targeted for ES today. So, but if you guys didn't trust that too soon, you guys need more confluences, you guys could have waited. So, what do we see here? On a 5-minute time frame, we see we have an order block right here. And as you guys can see, this huge 5 minutes ended up sweeping our internal range of draw on liquidity. So if you guys didn't enter and you see that that was swept, you guys could have been like, damn, bro, like I don't know what to target now. Like I said, focus on the higher time frame. You guys can target these levels up here, this swing point right up here. So you're not too late. There's always another chance with something. So if you guys thought I can't find an entry, I can't tell if we're bullish or bearish, you guys could have just waited after seeing the entire move. You guys would mark out this 5 minutes. This would be considered a unicorn model. So basically, I traded unicorn model back then. For those of you that know in other terms and that trade higher time frames, this would be also called forever model. Shout out Justin Whirlin. He also helped me out develop this and other, not confluences, but just let me think of the word. Like examples. He gave me more examples. I learned this also from another influencer. So, and I myself started creating, not knowing it was a unicorn model, I started creating this on my own. And then I realized, oh shit, it's already a model. So, unicorn model, whatever model you want to say, claim it, don't care. So, you guys could have 3 entry points, okay? Your entry points can be the first order block. We have our first order block right here. You could put your stop loss right here. Target this. Calm, almost 1 to 1. But I'm not going to do that because poor RR. I want to make more. Simple as that. So you guys can have your CE points on this 5 minutes. 5-minute CE point. For those of you that don't know what that is simply the middle part. So you guys can call it 0.5 or CE. Don't ask me what CE means again. It's always a tongue twister for me. So CE point right here. That's what you guys could use. Let me save this real quick. Let me change that. Okay, so 5-minute candle, CE point can be another entry, stop loss either at these lows, or if you're going to be super protected on everything else with your stop loss, this swing point. But since, like I said, I'm focusing on the higher time frame, we respected this 15-minute PD ray, so it's safe to say that you can put your stop above or below, depending if you're in a long or a short. So our CE point, I like to go just a little bit above on the CE point, and then you guys can target this. For obviously on this, we have a 15-minute BPR on ES. So because we have this liquidity mark, we also need to take in consideration that we have an entire huge zone right here, or our 15-minute BPR. 15-minute BPR is just a bullish and bearish block, or bullish and bearish fair value gap that have multiple fair value gaps in one. I use them all together, and that is what I make for one fair value gap, instead of just doing, oh, you know, I see a 15-minute fair value gap right here, let me mark this out. And then you'd be like, oh, but we have this one too. This could be your, you know what I mean? Like, there's no point in having all that lined up when you could just simply merge them all together. So let's say we didn't have that 15-minute BPR. I would then have our drawn liquidity and set my TP a little bit below. You don't want to get edge in the market. Get an edge in the market. Tell me about it. I have so many TikTok videos of me getting edge in the market for insane RR trades. Ended up missing out entirely. Always have your stop loss or TP below or above. So this is what we're seeing right here, okay? A simple 1 to 7, but like I said, on that 15-minute BPR, let's say it was like, you know, right in this area. You can target the bottom or the CE point. So you basically have a 15-minute BPR, which is multiple fair value gap imbalances in the market, 0 and 1. So that is a very high that's a higher probability, a bigger magnet for the market in general. You guys can target the CE point or the bottom, just like any other fair value gap. So moving on, what do we see here? Price tapped into order block, so you would have got filled. Price tapped into fair value gap, you would have got filled. What is price doing? A little bit chopping up in the area. Doesn't matter because stick with your rules. Boom, TP hit. And this model goes with everything in the market. This is exactly what I use to trade. Exactly what I use to trade. You guys still need to follow your narrative. As you guys can see right here, we have a 1 hour that was respected. So gives me a bullish indication that we're gonna end up sweeping these highs. Other buy side liquidities. If you didn't trust that, we have this 15-minute. We respected it and create our SMT. Higher probability. So we'll go ahead and just write down on what we're looking for. Our small checklist. So this would be our checklist. Fuck. Okay, so what are we looking for? Higher time frame PD rays. Okay. Our next one would be, as we wait, using both of our eyes on these correlated pairs, we're going to seek out an SMT in our PD ray or around. So let's say we have a SMT in the exact box. Even better if we have it a little bit outwards, but it's still considered in this zone. That's the same thing, guys. So SMT and PD ray. You guys can use multiple confluences or stick with one and we'll be trading off of an inverse fair value gap. Inverse fair value gap is what I use all the time, every single day. It doesn't matter what strategy you're using. You're basically ending up using inverse fair value gap as your entry points for everything. So you guys can either you guys can be like, fuck the order block, it's giving me a horrible RR. I'd rather just use the fair value gap because it's a lot lower. And for those of you that don't know this part, it's below equilibrium. We're in discount, long discount, short premium. So you guys can be like, okay, we have an order block, but it's still in premium. I don't want to long anything in premium. So you can use that as a confluence then and be like, okay, so we're having bullish continuation. I see that we have a 5-minute fair value gap down here. What am I going to expect? This fair value gap to get respected, which will make it an inverse fair value gap. We tap into here, and then we draw all the way back up. So you guys can be like, screw the order block as an entry point. You know, poor RR, but it does get you in the trade sooner. So if you want to be safe than sorry, then yeah, use the order block. If you are only smart, if you guys only see order blocks a lot more easier than fair value gaps, vice versa, then stick with one. Using two is just more confluence. So I myself, I used inverse fair value gaps for this strategy. Targeting the CE point as my main entry. That always gave me around a bottom tick of most of my trades. And if you guys can check this out, 15-minute time frame, we bottom tick this. This would have been our trade for New York today. So let me see what else that we need. So we have our PD raise, SMT. You guys always need your drawn liquidity. And trying to think what else. So as you guys can see, I went on the hourly time frame, marked out my highs and lows, and knowing what the bigger picture, what are we doing? So I use this 1 hour as a fair value gap, but it's actually my key level. It's a higher time frame. This is my key level. So we have a key level right here that's getting respected or disrespected. We have a key level respected. We have a 15-minute imbalance right here, which is now the start of our strategy. This is the start of our strategy. 15-minute PD ray, high time frame PD ray with our SMT. Our 1-minute SMT matches with our 15-minute PD ray because of time frame alignment. So there's that. If you guys only enter simply off of a, let's say, a 5 minutes or a 1-minute SMT and be like, oh, but we respected SMT way earlier, you know what I mean? Like, just relying on a 1-minute SMT isn't gonna do it for you. You end up gonna get faked out, or the SMT itself isn't gonna hold. Okay. 15-minute PD array, SMT, order block, inversion fair value gap. Boom. Enter. Target your drawn liquidity. And as you guys can see, remember when I said we have this 15-minute BPR resting above? You guys can target CE points or bottom, don't matter. Most likely the entire thing, because keep in mind we still had that one 15-minute as an individual, that one 15-minute fair value gap as well. We're just mostly focused on the BPR because crammed up imbalances all in one box. Simple as that, guys. Like I said, CE points resting below or above. This is exactly what I said on this 5 minutes. A 1 to 3 trade. Come on, guys. Like, this strategy right here actually worked for me. And I'm not bullshitting you guys, you know what I mean? And bro, since I said we had that 5-minute order block, we also have a 15-minute order block. You guys could have entered right here. Also would have bottom ticked it. Simple as that, guys. So I know this was a little bit of a long-ish video. Not horrible for what I'm showing you guys exactly. But have this checklist and always check it off. If you don't see any of these, you're breaking your rules. If you're entering a trade and be like, oh, but we don't have an order block somewhere, and you're saying to yourself, why did I enter? I mean, yes, you guys can probably wait for a break even, and then close it immediately, but I do not recommend you guys entering without your checklist. Always have your checklist. If one or two of them is missing, don't take the trade. Wait, have patience, guys. So key level, PD array, SMT in the PD array, order block. You can use that as an entry. If not, inversion fair value gap. If you don't want to use any of that, then I don't know what to tell you. I mean, these are your entry points. Like I said, higher time frames right here, then scale down to a lower time frame. Know what we're doing in the market, enter. Simple as that, guys. Simple as that. So I'm going to go ahead and end the video. Right here, you don't need anything else with the other pair. The only thing you need is just to know if one sweeps out liquidity and the other one doesn't, which forms our SMT. So that is the strategy. This is what I would have used for today, but I entered using something entirely different that ended up bottom ticking the entire market, and I ended up taking my TP right here, something like that. I forgot actually where I entered. I know it was bottom ticked it. I'd have to recheck everything, but there's your guys' example. There's everything for this trading model. So hopefully you guys learned something. I'll catch you guys in the next video.